We have our market master of the day. Samir Arora is founder and fund manager at Helios Capital. With us now. Samir, good morning. Great to have you with us here. Thank you very much for your time. Samir, how are things looking? I mean, here in India, when you talk to a lot of people, a couple of things come up. I mean, there is a lot of conversation around these measures which are being considered on the F&O side. There is, of course, always equities taxation, which looms. But, of course, no one knows what can really happen. And you know, it's more regulatory, and it's a bit anxiousness more than anything else. And that perhaps is keeping animal spirits a little subdued. What's your sense, Samir, on some of these points?
Oh, no, they're not subdued in the sense the market is up this year 18% or something. So they are not subdued. But obviously, this is the budget month. And last month was a strong month. So it's okay for everybody, including us, to wait. But I think this tax would be a big negative if it happens. Yeah, that would show that, we are getting overconfident about the world.
What about on the F&O side? I mean, you know, some lot size increase and
F&O side, the thing is that it looks a bit justifiable because although the only objection somebody can have is this is my money and how does it matter to you? Why are you restricting an individual if he has the money? But you know, this is how systems and regulations work, that even if it's your money, you are guided. For example, if Singapore residents want to go to the casino, they have to pay an entry fee, which is not there for tourists. So somebody can say, I am living in Singapore, I will pay why do I need to pay? And others don't. In everything you can see in life that it is there, because if it is too blatant, too obscene, too different from the world, and looks very speculative, then a little bit of checks and balances, okay. It doesn't matter that it's your money. Many states, even in India, don't allow gambling in many places. Nobody says, it's my money, why don't you let me do it? So it's okay. But the tax is different only because it stands out relative to other other markets. And in India, we have this story that, you know, we want parity between equity and debt taxation, and that looks like a very, this is the reason why we should do it. But then they don't tell us how much tax is collected on STT, which is not given by the bond side. We don't know how much is the tax discussion, how much are we losing, how much are we gaining. So in India, this discussion is always, nobody knows anything. So anything can be justified, but it is not right.
Samir, you know, it's always obviously hazardous to call in the near term in the market, but just your overall sense, are we looking a little toppish here, or what's the overall kind of sense you get?
So because there are this budget and all in between, and you have to satisfy the expectations in many of these sectors, which it looks very difficult. That how do you satisfy somebody's expectation on how many aircraft carriers we'll make, and for how many years it takes to make a carrier, and how many does India plan to make when China has only 3 or 4, and I read in some Kotak report that US has only 10 or 11. So some of these expectations are so unreasonable that you have a good budget, bad budget, no budget. It is beyond normal realm of speculation. And then there is that whether we do a few small self goals only because we feel that, India is the only growth country in the world and all that. So we should just have a balance as a country and as a system. Because everybody's needed, FIs are needed, PE is needed, FDI is needed, domestic investors are needed, but it cannot be only that, because mutual fund flows are there, everything else is taken as granted.
Samir, morning. Any changes in the way you're approaching India now in stocks, themes? You've trimmed, added to any of your positions?
Many positions we must have trimmed or added, but in the big picture sense, my net exposure, my long short fund used to be 74-75% going into the polls and exit poll and all that. And I want to reduce it, and have reduced it quite a bit to in the high 60s.
Okay. And where is it that you, in a big picture, where is it that you've trimmed your positions, and have you reallocated part of the money? Any new interesting ideas or trends that you've observed or you're watching?
So right now we have trimmed from the these stocks which normally we don't like, but they have gone to those stages of 70p and 65p and 80p, whatever be the growth rate. Because in the end, we think that those growth rates cannot be satisfied so easily. And at a slightest bump, you will lose 10-15%. And by the way, we did lose on some of them for a few days on that June, whatever, that 4th, or what was it, the day when the actual results came. And most of them came back, but now we don't want to see that kind of a day again in our, at least in the short term. So you can then the rest of that conclude which are these. They are, some of them are in the state-owned group and some of them are in the consumer group.
Hi Samir, good morning. I'm wondering whether people want to see that sort of a day again, because we saw a lot of retail money coming in there and some of them are dancing to the bank, if you compare with those levels on June 4th. But let's focus on one of the larger names that you've been positive on, HDFC Bank. There's been some technical news flow with regard to their MSCI rejig. There's been the fundamentals with regard to the operational update as well. And there's some chatter that maybe there could be some rejig at the top. What's your view on the current management with regard to HDFC Bank?
You must have seen Djokovic interview with the BBC. And he said, how many times you want to ask the same kind of questions? So I'm not answering only from your point of view, not from my point of view, because my interviews become too boring if I keep talking about HDFC Bank and Zomato all my life. So ask me a third question and I will answer.
No, but I wanted to ask you.
It's boring for everybody else who's watching that as if we are a one stock wonder or a one stock portfolio. I have, so I will not answer just for the heck of it, because I can't keep answering on one stock all my life. I have it.
Okay, so give us another one then. If not HDFC, Zomato, we have spoken about that. What else? What else are you?
Djokovic didn't ask BBC, then I will tell you the question. I follow the big boys of the world.
Okay, let's talk about the pain space. Yesterday we got a price increase coming out of nowhere, and you have been quite positive as well on Asian Paints. I think we have mentioned that as well. The stock actually has been.
We are not positive, and I can't speak on this because I'm interested in a different direction for last 1 year, because it was so obvious that there is so much pressure, and we had these PMS fund managers and all who made it look like some God's gift to mankind. So the thing is, now we'll see how it goes in the end, but a 0.75% hike, or this is more to show to the world, is as much signaling, but it doesn't mean much in real numbers. So it is also in the high P average growth zone.
Yeah.
But
Samir,
I cannot talk much about it.
I like the comparison with Djokovic. I know I can see where you're going.
You have to benchmark with the best.
Let me circle back to the market, because everything is done so well, right? So I think we should talk a little bit more about overall, where we are at. So we just had the management of Gulf Oil Lubricants. I don't know if you watched that conversation. And there was this buzz, and someone sent me a one-pager about how lubricant companies they have this big new opportunities with data centers. And I got very curious. And I said, well, what is the size of data centers in India? And, you got to put all those, you got to cool and it's a real thing. And I read up, etc. And the management came on. They said, well, it's some 0.00 something percent. So there are so many narratives which are flying, and stocks are up 15-20% before you can verify.
That's what I'm saying. Some of this is becoming wild. If you see this, as I was talking about this aircraft carrier, that you have added so much market cap to these companies, and how many aircraft carriers will India make, and each, I assume, will take, 10-15 years to deliver. And so these profits, even if you get one order, two orders, will take 15 and 10 or 10 and 15 years, and you give them the market cap today. So most probably that cannot end well. The issue is that whether these stories, which are quite a few, not very few, but quite a few, if they deflate, are they enough to bring down the rest of the market? And my thinking on that is that it might slow down the returns, but it won't make it go against the world. For example, if the world is okay, we may underperform for a few months and things like that, but it is still going to be better than what other choices you may have in India. And relative to the world also, it will be adequate, if not the number one market for the next, say, 1 year. And if they increase taxes, then that will really, really make India on a post-tax basis not very different from a normal any other market where the taxes for most of these investors is zero. We were, these pension funds and endowments and funds based in Singapore, Hong Kong, Dubai, which is where the money centers are, and the pension fund, sovereign fund endowments who are anyway tax exempt. Then if we are outperforming on a pre-tax basis by maybe say 100, 200 basis points a year, that means Indian market goes up, say 12% per annum in dollar terms, and the other markets go up, say 9, 10% even. Then post-tax, you'll also become similar to them. Then what is the big story?
No, got that. Although on a philosophical level, the pushback to that is governments around the world have realized that you've got to keep markets strong, right? Because you can always...
No, not pushback. You mean that it may not happen?
It may not happen. The reason it should not happen.
Pushback means that no, they should increase.
No.
Yeah, I agree. No, I'm also hoping. I'm looking at the clock. It's Thursday 11th. I think you have 1 or 2 days before these things get frozen in the budget, I assume, and then they go for it. It'll be too late to give these interviews then. Better to say now that please don't do it. It's not worth it. You are getting a lot of money on STT. Yet STT you are not putting in that same pool, and therefore we keep saying that, oh, the equity guys are getting lower tax relative to the bond guys or the debt guys. But let me say one thing, that if it comes through, then in theory, the biggest beneficiaries will be the banks. Relatively, of course, everything might go badly those days, but relatively it would mean that you are making it easier for the public to, not easier, but you are making the two a little bit more this thing in terms of tax preference and what is the interest of the government, which it must be then that the asset allocation is getting influenced by tax considerations, although they are not transparently counting STT on the equity side and taking that as an aside and then saying the tax rate is low. So actually, it's not that different, I think.
One more thing, which again, this is we don't know if it'll happen or not. Is on the debt side now, everything is taxed at the marginal rate, except arbitrage.
Yeah.
Arbitrage, and that may also get corrected. I don't know. I mean,
that's possible. But right now, I don't go so deep. I just doing big picture that this is wrong to have, remove STT, remove anything which is giving tax and say, no, but excluding that, the tax is low.
So suppose we do get some sort of a tinkering, right? Increase in holding period or increase in the amount, the rate, markets will fall. Will that fall be a buying opportunity, according to you? Or do you think this will really unsettle the markets for a longer period of time?
It will fall, according to me, very simply about the same as the tax hike. Because let's say going in, you have a pre-budget expectation that you should make X% return. And so if you take 5%, it will fall broadly similar to compensate for the current holders. Then the new holders know that this is the new rate and all that, and then they change. So I think lifelong flows will moderate. As I said, it's a big picture thing. It doesn't mean it's bad or you'll have negative returns. But obviously, why should new allocation come in the same way if the expected returns from the market, instead of being 12%, are 11.4% or whatever, cut whatever. How can it be? I mean, that means these numbers have no meaning. That you can, whether your expected returns are 12 or expected returns are 11, it doesn't matter because the models work like that, the thinking works like that, and the differences are only this much. It's not that 12% will become 5% return expected for long term. So obviously it matters when these big guys do their allocations, and you can see what happened in 2018, which was after a good rally, there was a tax hike of 10% effectively because the long term was 0 before that and became 10. Now we can keep saying it is because of COVID, this, that, but if you see the cumulative flows of FIs in India, although they are good, they are not of the same scale as we used to have when we were a much smaller market. And I can tell you direct conversations, of course, these guys being, don't come on TV and tell you directly, but they are most bothered by the tax. Because there is no set-off, because they are tax exempt. For our investors or investors in ETF, there is no set-off. They have to pay tax a second time in the US. Because if a guy comes into an ETF for 2 months and goes away, how to link the tax that the ETF paid with that underlying guy? What certificate to give him that this much tax has been deducted on your behalf? That is why the world doesn't take tax from foreign investors, for example. But here we are not saying that there should be a different tax rate for foreign and Indian. You please increase STT a little bit. It'll solve all your problems. You still get the same pool of money. You will also discourage short term. You will also discourage F&O indirectly by increasing that cost. You will get whatever amount you want. Just change the structure of how you collect it. You increase it as much as you want. I don't think any foreigner cares. It is just this. It goes into a basically it's gone without having any this thing, because you might book and like for example, first quarter is good, so you have accrued a tax. The NAV has become like that. Somebody has come in, somebody has gone out, and then there's a fall in the market. Now there's no tax to be paid, but somebody has redeemed at a low price, high price. All those things are there.
Yeah. Got it. No, I think very convincing arguments, Samir, and I hope that you're being heard in the North Block.
That depends on whether they are watching your channel or not.
They are. Thank you very much for joining us. Always great speaking
Nigel,
with you.
But I just didn't want to answer the same question again.
No worries, Samir. I think I've got, I got the point. So let's see. We'll keep HDFC Bank out, but let's see. All right, Samir, thanks a lot for joining in and filling us in with all of those views.